Asset value predictions. Equities will remain in a bubble through the end of this year and the beginning of next, helped by rate cuts. However, non-profitable and speculative meme stocks will start deflating because the big hedge funds will say, we're not going to play it all the way to an end. We're going to start getting out because a lot of them, I think, are going to be worried this bubble's going to pop and they don't want to be in those more illiquid names. But the NVIDIAs, the Microsofts will still keep their rich valuations. The market, though, will go through a correction of 20% at some point, probably in the middle of the year, because of the popping of the AI bubble and consumer weakness. I think the amount of debt that it needs to be funded to continue this AI thing will start putting crimps, and the energy issue, people will say, well, how are you going to get the energy for it? And a lot of these AI data centers will have hard times getting community acceptance to be built in their communities. Fixed income. As the Fed cuts rate through the year, bondholders who remain concerned about inflation, longer duration yields will not have a corresponding drop, just like this past year. However, once the markets become fearful about a recession, the 10-year will drop below 3.25. I know a lot of you in here own commercial real estate. You're all sitting there saying, when do I go and refinance some of my commercial properties? And it's all pegged, as we know, largely off the 7 and 10-year yield, but mainly the 10-year yield. Residential real estates will continue to fall and decline by 4 to 5% nationally, even as interest rates fall. Rising inventory, lower mortgage rates, and falling values will spur a nice bounce in housing sales in the spring and summer selling season. Commercial real estate values and performance will be a mixed bag. Transaction values will increase. Values will be supported by falling rates. However, economic weakness later in the year, rising vacancies, and overhang of distressed properties will temper an increase in property values. So I think commercial real estate values, some will go up with rates falling, but typically rates fall, commercial real estate values go up. But there's enough negative factors that I will think keep values kind of just flatlined because you got falling rates, but you got other negative things going on. Global and political predictions.